Time for our big market voice then back home, and we have Mahesh Patil joining us with his take on all that's transpired in the markets over the course of the last few sessions. Mahesh, it's great to have you on the show. Thanks very much for taking out the time. What do you make of the comeback that we've seen in volatility, which has kind of, in a way, capped the upside to this market? So yes, nobody's doubting that we may not go back to our previous record highs, but how much further from there would seem like a bit of a struggle, even if the growth numbers come back. So while the economy has not topped out, it seems like the market is divided on whether the market has indeed just as yet or not.
Yeah, I think after a very last calendar year when we saw very low volatility, in fact it was the lowest dispersion in the market index what you see in the last 15 years. I think we were in for a higher volatility in this calendar year, and I think just after the budget it provided that, and I think it's now moved on to the global front. We have seen across especially in the US the kind of pullback what the market has done from its peak is probably signs of things to come going forward. I mean, as interest rates in the US have gone up, I think there is some concern in terms of the huge amount of liquidity which has been floating around, okay, whether there could be some pullback of that in the coming months. So I think it's clearly now the global events, I think, which will drive our markets and would lead to the kind of volatility what we've seen in the recent days. It might continue for some time, and that could put some kind of a near-term pressure on the market, we think, while global growth is also very strong. Domestic earnings in this quarter have been fairly good, but I think some of these other factors on the global front will override that, and that could probably lead to some kind of a cap in the short term for the market to move up and make higher levels. But I think we've seen these periods of volatility in the past also. They last for some time and again things bounce back. So I think it should be a passing phase is what one can look at it.
But Mahesh, considering how dreamy all of 2017 has been, wherein there was just a one-way move up for the markets ever since demonetization the previous year, and at the fag end, and given the kind of returns that we made, 30% on the index alone, 45% on the mid and the small cap index, and I'm not even getting close to some of the individual stocks, what's the kind of retail behavior that you've seen in the last few days? Is it more a buy and dips behavioral pattern that you're witnessing, or are you getting that fear that a few more days like what we've seen last 2 weeks and you could see some redemptions as well kick in?
So I think the behavior from domestic investors was because of the budget event. So pre the budget there were some concerns about long-term capital gains tax, and one saw some redemptions especially from institutions or large HNIs, but the domestic retail flow continued to remain fairly strong. And post the LTCG which was announced, there was some apprehension that you could see slowdown in incremental flows because of that, but that has not really happened. So we've seen even after that, and especially even after the recent volatility in the markets and a mild correction what we have seen, the inflows continue to remain fairly good. So I don't think people are too worried about that. I think people are still looking at it as a buying opportunity in this fall, because many investors who didn't really want to didn't participate earlier because the markets was just going one way are seeing some opportunity in this correction. But I think one has to wait and see how this pans out, because if the markets remain weak, or if they correct further from these levels, which is not impossibility, I think in that scenario one has to wait and see. But I think large part of the inflows are pretty sticky, are coming in from regular SIP money, which I don't think should get impacted. That would at least be around 40-50% of the current inflows what we are seeing. Yeah, but some moderation inflows could happen, especially after the long-term capital gains tax, as people try to recalibrate that into the expected returns. And a lot of money which was moving into the debt side, and from debt coming into equity, especially into the hybrid category, I think there you could see some kind of a slowdown.
So what is it that you're doing as a fund manager right now? Is there some cash that you're putting on the sidelines and put that to work once we do see future dips come by? Are you fully invested? And what is it that you've done in the last 2 weeks? Have there been, or is it more of what we saw in 2017, any dip and you should buy more of the same? What's the strategy that you followed?
So I think in the last few weeks, as the inflows continue, I think, and especially looking at what's happening globally, we've been a bit cautious. So trying to hold on to some liquidity and some cash in the portfolio, looking at opportunities to buy in, because I think what we're seeing is that while the index has just corrected by around 4 to 5% or so, I think the correction in individual stocks, especially the mid and small cap stocks, could be much larger. And I think this kind of volatility provides us opportunity to really get into some of these stocks at a more reasonable valuation. So we are still trying to wait out and looking at, especially after the quarterly numbers which are coming, I think it's interesting time to again rejig the portfolio and look at stocks where earnings visibility and this thing is much stronger, because that is the only thing which can hold on in a volatile market. I think it has to be now increasingly stock specific, better quality, and certainty of earnings are the three factors I think which will protect in any kind of a correction. So some liquidity around focusing on high quality stocks is what our strategy is at this point in time.
Right. No, and that makes sense as well, Mahesh. We've been talking about how, balanced funds perhaps protect the downside risk, especially in a volatile market, giving equal exposure or, a balanced exposure to equities versus debt. But I just want to understand, for the benefit of our viewers, how you're looking at, your bias coming in for rural and small businesses in this sort of a market environment. I'll tell you what, a few days back I spoke with Katie Koch of Goldman Sachs Asset Management. She was head equities there, and through offshore funds they have a lot of investments in small caps and mid caps in India. What's the view out there? Do you think that there is still a strong ground to buy high quality mid cap names which would cushion the portfolio against volatility and downside?
So the smaller mid caps, clearly I think whenever there is increased volatility, we see a larger kind of a correction over there in the small and mid cap space. But I think if you take a slightly longer term view, and our view is that domestic economy is starting to look up, and as you mentioned rightly, we are seeing the rural economy again coming back in focus. I think government is trying to really do a lot of measures to protect the larger population which is there in rural India, and also things picking up on the infrastructure side. So I think a lot of these mid and small cap companies are companies which are focused on the domestic part of the business, and as we see a recovery over there coming through, I think you should see a better and stronger earnings growth in the small and mid cap space. So there are many companies where the outlook and growth looks fairly strong over the next few years, and valuations was the only concern in some of these stocks because they had run ahead of time. I think in any correction, especially in good names where there is strong earnings visibility, I think we should it should be a good buying opportunity, and one need not be too worried on that front. Many companies which had gone up in the small and mid cap space without any fundamentals, just because of the liquidity, I think there is reason to be more worried about there, and one is to really stay away from those names.
Mahesh, the new norms introduced, would that make you increase exposure to PSU banks in a convincing manner right now, or maybe in the near term, or tell you that okay, for a bit, because there's going to be increased provisioning once again, another round of higher provisioning by these banks, that you want to stay off for a bit?
So the new norms from RBI which have come in actually brings a lot of transparency and equal footing across all the banks. So I think in the shorter term, clearly it puts some pressure on provisioning, higher provisioning which was there, but under the IFRS anyways, I think this was likely to come in, where the banks needed to make provisions based on their perceived expectation of loss given default. So I think, yeah, while it puts some pressure on the P&L in the shorter term, but I think over a medium term we think it's positive in terms of trying to make recognition consistent across banks and making it more transparent, and some of the corporate banks, okay, which are basically going in through that phase where they are trying to recognize this account, making the provisions, cleaning their balance sheets. I think you should see, we still continue to still be positive on the corporate banks. I think what this does is that it really brings out everything over the surface, and it's now easier for us to really compare across banks on a common parameter, okay, to decide, okay, which bank is looking much stronger and better, and where it will come out of this problem much earlier. And so I think with the recovery back in the economy, I think credit growth coming back, it also helps much better for banks as the top line grows much faster, to be able to take care of some of the old problems which have been there on the NPA side. So I think doesn't really change much in terms of our outlook over there. I think we continue to prefer the stronger corporate banks in this phase, and also banks which have been able to really get the right mix of retail and corporate growth going forward.
Mahesh, what is your outsized bet right now, where you think that markets are not either recognizing the potential of earnings, or markets are not recognizing the value of the franchise? I mean, if you are looking at outperforming the index and your peer, then you have to do something differently. So what is that outsized bet?
Yeah, so the outside bets, one, as I mentioned earlier, some of the so I think one is the corporate banks, clearly, where we think the cycle is turning around, and with the new RBI regulations, it brings more transparency. So that's one of the bets, okay, which we are looking at. And apart from that, the oil and gas sector, where we've seen there has been some kind of pressure recently, because there was some dilly-dallying by the government in terms of making increases in the petrol and diesel prices. I think over there, clearly we see good value over there, because a lot of these companies are at valuations which are significantly below the market PE multiples, and there has been decent outlook on the refining margins remains fairly strong. We don't see any big capacity coming up. So this is one sector, the oil refining and marketing companies, where we think the outlook there looks fairly good, and with oil prices also have kind of peaked out, I think we should see better profitability coming in over there in that sector. So that's clearly one sector. The other sector where we are positive on the rural side, we've seen the government efforts in terms of trying to shore up our farm incomes, and in the budget in terms of trying to manage the MSP prices, and also trying to give a larger insurance cover. All these factors will lead to better rural income, and that would really be positive for a lot of the small consumer discretionary names, which are trying to make inroads into the rural market, and looking at the vast opportunity over there, we think that should provide a good long-term growth for these companies.
Okay. Mahesh, currently debt yields are at about 7.5%, 7.5, 7.6, that's depending on the day we are marking the yields. So what to your mind at the current juncture should be a projected or expected return from the debt market, because yields are not at 6.8%. Inflation is at 5% and yields are looking stable. So now post the sell-off in the bond market, does it make sense to allocate maybe 10-15% of your equity small cap holding into debt?
Yes, I think debt market has seen a lot of volatility recently, because interest rates had they moved up. So I think we don't expect any further increase in the bond yields. Yeah, clearly there is some pressure because of US prices have gone up. US bond prices have gone up. But looking at where inflation is domestically, we think it still remains fairly anchored in the band of 4 to 6%. So there is enough cushion there, okay, to really ensure that the real rates remain higher. And I think there is some kind of increase in terms of the bond spreads, what we have seen. So that gives a very good carry in terms of some of these credit funds, okay, which are there. And so I think there is, looking at now where the expected returns are from the market, and especially after the long-term capital gains tax, the tax advantage which equity funds has narrowed down. So it makes sense to make some allocation definitely to some of these credit funds and bond funds, for somebody looking at stable returns, and do the right asset allocation, because I think in the last 1 year we've seen a lot of money had moved into equities and people had a disproportionately higher exposure over there. I think it's time to do some rebalancing and make allocation looking at the yields where there are and the kind of carry some of these credit funds are carrying at this point in time.
Okay, Mahesh, appreciate your time and glad you could join us. Well, meanwhile, markets are holding on. The stocks of the list of stocks which are at the 52-week high. It's not bad. L&T is still there. You got a decent, mix of both Chola Mandal. Yeah, it's an